you got for me, Jay?
How do we follow price trend? So that you kind of went over that, but how do
So
we follow price trend?
you want to follow a price trend? What's going on, Lataria? You want to follow a price trend simply by looking at structure. Okay. Now, what I like to do is basically go to a higher time frame, something like the daily, right? So let's just say we are on Euro USD. We're on the daily. Let's go to the very front of the chart. Right now, we have a downtrending market, right? We're in consolidation at the moment. Nothing really crazy going on, right? So essentially, this market is in a zone where it can bounce to the upside or it can go lower, right? We're like in a middleman area right now, right? We've seen price come from this point, push up, consolidate, and continue to move higher. We can see price come down, consolidate, and continue to drop lower. So essentially, right now, like I said, we're in a zone where it can go either way. So you really want to watch to see exactly what happens from this standpoint, because now when you look at this, what has happened is if this was a fight, right? This is where you want to kind of look at the market in a sense where common sense, right? 1 + 1 has equal 2 in a sense, right? If this was a fight and you were looking at bears and bulls, right? Who would be winning right now, right? We got a high, a low, world high, a low, lower high, lower low, lower high, right? And now we're just kind of like ranging in this area, lower high, ranging. We pushed up again, made a little bit of a high, and now we're making low, equal low, lower high. We're going to be lower high, lower high. So now essentially we're pushing lower. We're making lower highs, and now the lows are pretty much staying at a certain level. And sure enough, this area that we were ranging in right here, we just broke below for a retest and a drop off. If we can push lower than this low here and close below that zone, we can see a nice push to the downside, and then we can start trading it. So what I'm showing you is you want to use structure on your side. You want to find a high, a low, a lower high, and you want to assess the fact of, okay, if this area here is pushed lower than, like, right, we had a wick here where this low was. If something can break lower and close below, we know for sure that we can see a nice drop off, and now we can use this area as an area of resistance as it comes back up to retest it, and now we continue to drop lower. So no matter what you do when you're trading, always, always, always look for structure, no matter what. Even inside of consolidation, it's never going to lead you astray if you just simply look for structure. I promise you. All right.
We got Amy saying, well, she see your markups, your white lines are different from the RSI lines. So her real question is she wants you to explain the divergence.
Okay. All right. I'll go back to the hourly, and I'll go really in depth with this one too, because divergence for me was like a game changer when I understood it. Now, in order for you to understand divergence, you have to understand what the RSI is, right? We talked about it a little bit earlier. It's a momentum indicator, all right? Now, I know a lot of times people jump on and they'll just see an indicator. Okay, I'm using it. Somebody said use it on, IMLTV. I'm just throwing it on my chart and I hope it worked, right? And you don't understand what really goes into it. Now, the RSI, like I said, is a momentum indicator. It's going to dictate the momentum in the market. You can notice when the market started moving to an uptrend right here, right? We were pushing higher. What happened right here in this area? Price broke above, kept testing it, dipped a little bit below. And what happened when it dipped below here? We had a dip below, right? It dipped below our 8 moving average. And then what did it do? Come right back above. Same thing again, dip back below, came right back above. So that next candle is always going to show you what the market wants to do once you see that break of that 8 moving average. But when it broke below, came right back above. So now this middle area is going to dictate the strength of a trend for us, right? If an uptrend, you want to see price typically stay above this middle zone. Same thing that happened back here, right? Price was moving in an uptrend, right? A nice strong uptrend. And then what did it do? Broke, stayed above, kept testing, stayed above. And then once it broke our 8 moving average, we saw it break below here and it stayed below. And now we saw a downtrend take place and it stayed below. So now we understand that the RSI is going to give us a strong indicator of momentum. Anything above or trying to stay above this area where we see more price action or more movement here dictates an uptrend. Anything below dictates a downtrend. So we have uptrending momentum, downtrending momentum. Okay. Now, with that being said, this is going to dictate the strength in this momentum. So if something's running down really fast, like this came running down really fast, and it hit this area, which is considered to be an oversold area, right here is about level 10 for me on my RSI is oversold, 90 is overbought. So if something came down really fast, and oversold and overbought simply means price moved too far, too fast, and wants to come back to the middle, right? Price came down this far, hit this area, and what did it do? Started to bounce higher, pull back up for a little resting period, push back lower still, and now what happened? Price came down, bounced, hit our 8 moving average, next candle pushes right back down, right? One more break, came above, and the next candle never closed back below. So now we knew we had a nice momentum shift, right, due to our 8. Now, when this happens, this is a sign that we have to pay attention to. We have a low pulling up and making a lower low, because this low is lower than our previous. Very important that you notice this, because this happens over and over and over in the market. Okay, so now when this happens, what happens here? We had a low pulling to a higher low. The momentum is showing that we're making a higher low, meaning that the market is strengthening because it's not pushing lower like it did on the chart. All right, the chart will lie to you, the strength won't. So now we had a price drop down, a price area down in the oversold area, I'm sorry, bounced to oversold, pulled up for a resting period, dropped down, did not make a lower low like it did on the chart. This is what we call divergence. The RSI is diverging from what the actual candles are showing us. So now that we see that, we got strength pushing up higher here, not making a lower low. Now I want to see if we get a break of this. Once this broke, now I see confidence in the market to take this potential buy to the upside. Same exact thing happened here. Price from here ran up too far, too fast, and what did it do? Hit our overbought area. Price got bought up so fast, hit our overbought, came down a rest, pulled back up to this zone, and now what happens? Price started to come back and break my 8 moving average, and we have a high coming down to a lower high down here, right? All of these little slight movements were up, down, up, down, up, down, right? And all of a sudden, finally a break. This was just up and down, and finally broke below here. And you can see right when we broke here, if you follow the cursor straight up, right when price broke here, we had our candle that broke out our 8 moving average. So this starts to kind of give you a much stronger indicator of what to look for when you're looking for divergence, because now the strength is not going higher. It's made a lower high from this area. Even though the candles are going higher, the strength has not. Okay, and what you want to see is price mimicking itself, right? Right here we had a high, came down for resting, higher high. What happened? The high went sideways, rested, and made a higher high. Everything made sense here. It followed what happened on the chart. This is diverging. High, higher high, high, lower high. Okay, and that'll just put you in a much stronger understanding. You said, how should we set our overbought and oversold? Does it change based on our risk management strategy? Oh, no. Overbought and oversold will always be, well, for me, overbought and oversold will always be 90 and 10, and my RSI settings are 5. And I like to put a middle area here of 45 and 55 to give me a little area for price to play with, because a lot of times the RSI will just give you a one line in the middle, like a 50. And I've noticed that 50 area doesn't really give you a strong enough indicator of what price is doing. Like, it likes to come in this area and just rest before it makes a new decision. And you can see every time it came back, it gets inside the zone, makes another push. Same thing here. After it makes a nice push upward, it'll come back to rest, right? Rested a little bit longer, came up, made a push, and came back to rest. And this is healthy when you see it make these pullbacks down into this middle zone. All right. So now that we see the RSI giving us a lot more, understanding of what we're looking for, you always have to combine it, though, with other things. Also, the time of day is very important. If you haven't noticed, everything that we've done here inside of this RSI with entry is typically happening when? Towards the middle half of the day, right? Right around this London session. Because think about it. We're on an hour time frame. This would be the 5 o'clock candle, or right here, this would be 5 o'clock. So we got 6, 7, 8, 9, 10, 11, 12, 1, 2, 3, 4, 5, 6, 7, 8. Remember I said around like 8 o'clock, 9 o'clock, New York session starts up, boom, big volatility happened, right? Same thing here. What do we got? 5, 6, 7, 8, 9, 10, 11, 12, 1, 2, 3, 4, 5, 6, 7, 8. Same thing, 8 o'clock in the morning, 8 o'clock in the morning. So now you understand that the time of day makes a huge difference when you want to start executing on trades, right? All of this buildup only for the big movement to come at 8 o'clock. Okay. So just anytime we see something, you have to kind of weigh the options of if it's worth your time. Imagine you seeing something like this take place, but it happens right here inside of the Asian session, and you know you're not going to see a big movement come inside of that Asian session because there's not a lot of money flowing through those Asian banks. So you don't want to set yourself up for something where I'm going to jump into this trade at 6:30, and then nothing happens all the way until like 1 o'clock, 2 o'clock in the morning. At that time, you're knocked out sleep, or the market already done a reversal or something of that nature, right? Because news can come out, different things can take place, and Lord knows with the president we got, if you fall asleep with your chart with your chart open, it's a wrap. That man can do the tootsie roll on the microphone and make a whole trade go left. So you want to make sure no matter what's happening in the market, you're in position to benefit from it, but at the right time when you know volatility is there. Okay. Let's see. Any other questions for me over there, Jay? I know I probably skipped a lot of stuff. I was going so
No,
far into the RSI.
no, we've been killing it, man. All good.
Okay, sweet, sweet. Now, another thing I wanted to share with you guys is a lot of times when we get into these trades, and like you were saying, Lateria, about like how do you follow like market trends and things of that nature. Essentially, what happens in the market is we'll get movements and they'll mimic similar movements from the past. Okay, so let's see. Let's just find something like I don't know. I'm gonna just scroll back randomly and then just find something. Okay. Oh, put that back there. Let's just see. Let's just see. Okay, so right here, right? We got an area in the market right up in here where we had price drop off, pull back, and drop off again, right? Let me move this around if my screen's gonna act right. Okay, right here we got price high, low, lower high, lower low, right? Pulls back up, lower high, big drop off, right? Essentially what happens in the market is we have these ABCD moves, right? They happen over and over and over again. So I'm going to just show you guys one example of what I mean when I talk about these ABCD moves. Okay, here we go. So right here would be, I don't know why that's D, but let's just, all right, this would be A up here at the top. All right, and let's see, get another one. This would be B. All right, and two more right here would be C. Oh, my bad, guys. Forgot I got to hit OK. Moving too fast. There we go. C. And last one right here would be D. All right. So what happens in the market is we have these ABCD moves. Now, what happens a lot of times is we'll get something like news, right? News will make this entire move right here take place. Like, boom, big A to B move, straight down, right? And then from here, we'll have pretty much a retest or a pullback from this B move back up to a level of structure in the past. So now we'll look left, and what do we have? Price moving up, down, up, down. So right here was a double top area, and price did what? Broke out, came back, retested, took off. We'll use this area right here as a really good area of support. And what happened when price came back down? Broke it, retested, dropped off. Same thing here with C. So now we have A, B pulling down to this zone. C was a retest, and then D was a complete drop off from there. Now, one of the things that a lot of people don't pay attention to is A to B is usually equal to C to D, if not better. So something like this, right? This A to B move, right? Straight down here is usually one of those situations where we can find our movement from here to here off of C to D, off of this kind of movement. And we can basically say, okay, from here to here makes sense. And now think about it in this sense too. Well, moved it too far down. If it was right about here, right? If this was our entry from C down to D, let's just say if I move this, right to where this is, equaling out. If we look left, this would have been a great place to exit the trade because look where the structure was back here. So this initial movement that we got from just top to bottom, and we dictated once we got in from here, This would be our movement from here to here. Would have made a lot of sense because looking left, this was an area of structure and price just blew through that zone completely, right? And then came back to retest it and then broke out again. And then did what? Came back, same thing. All the movements repeated itself from here to here. This was a zone that price bounced and went back up again. And now we start to see price break out of this area. And you may use it as an area of once that was once support, once resistance has now become support. But just having that understanding of A, B, C, D, and this was just the area we wanted to just stop and kind of, show off just to give you an understanding of how powerful it is when you start seeing these levels of structure. You always want to look left. Every good trade is always going to have difficult spots as it works its way through. It's your job just to look left and find out, okay, this is where all the noise was in the past. Let me just mark up this area here, keep this in my mind. Once my trade comes into this zone, I want to see what will happen. And what happened? Price broke into this area, tested, came down, pulled back one last retest, hit the bottom of this zone, pull back up, and we still have our 8 exponential. What did it do? Stop right at our 8 exponential moving average and finish dropping off, right? Sure thing, pulled above. What did the next candle do? Push us right back down. And next thing you know, this candle pushed back up. Next candle pushed back up. We knew this downtrend was done. It ran out of steam simply because of what we had with our 8 moving average, right? Just little things like this will start to help you along the way when you start looking at the market.